The U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled 9 Tips to Spring Clean Your Finances. Mike, when we look at getting things squared away to start a year, one really important place is just making sure that your accounts have the right beneficiaries on them to begin with.
Yeah, I've seen this ignored. It's rare that it comes into play, but certainly if you pass away or if your spouse passes away, it's going to make life a lot easier if you've thought about where the accounts go after the fact. I cannot tell you how many times I have seen people leave an ex-spouse, for instance, on as a beneficiary without really thinking about it, or the number of times where people have made changes to their estate plan but not change their beneficiaries.
And a piece that goes along with that you mentioned there is making sure that your estate plan is also updated as well for life events or changes in your family situation that may have occurred.
Absolutely. I mean, not everything is going to have a beneficiary on it, but there's additional confusion there too, right? I change my will or I change my trust, and I don't tell the investment company that manages my 401k or my investment account. Those two things do not talk to each other, and in many cases, the beneficiary will supersede the will, the trust, these things that you think you've taken care of by visiting the attorney and checking all the boxes, but not necessarily depending on how you do it.
Our guide is titled 9 Tips to Spring Clean Your Finances, and there are 2 ways to request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request the guide at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Chuck, Mark, and Tucker with you, and our top story today is the continued deterioration of New York Community Bank Corp, ticker NYCB, as you would expect. You know, they don't get a fancy ticker, it's just their initials. But they're down an additional 7.25% today, bringing their year-to-date performance to, well, not great, down about 58%. And that is actually, sorry, no, that's just through yesterday, so another 7. I mean, they're going to be down more than 60% when it's all said and done. And this is all in the last week and a half that this has materialized, specifically after their earnings report where they came out and they said, yeah, we're taking a couple pretty big charge-offs for commercial real estate that, you know, we had to take on as part of bringing a bunch of Signature Bank assets on board when Signature Bank was going under last year. And now you've got concerns that the bank is no longer going to be able to operate, which when you're a bank, once those concerns start to materialize, you are generally not a bank for much longer. You become absorbed by another bank, or the FDIC puts you into receivership and then tries to find another bank to absorb you. That's kind of how it goes. Your thoughts, Mark?
Well, it's not a broader crisis until it is. It is a regional banking crisis. We don't know how deep the rot goes. It's almost trite to say that it could balloon into something bigger, more insidious and pervasive. This is developing by the minute. Everybody's on pins and needles. Oddly, broader markets, like you might expect a flight to safety on. There's not a lot of new information here, but things aren't getting better. The hemorrhaging is looking more intense, at least from my sort of layperson's, not really my area, but as, I guess, qualified as any other casual observer to opine. The hemorrhaging's not abating, yet broader markets, stock markets, not regional banks, which continue to get hammered, both large, mid, and small. But broader markets are up. Bonds, which you would think because they're treasuries, they represent a safe haven, you think they'd be up as well, but yields are a little changed today. In the back of their mind, traders are waiting for the liquidity tsunami that the Fed's going to provide to mitigate this.
But you always need, like, with the way I always like to phrase it is, first of all, you have to remember that tsunamis are disasters. And the second part is that the water level...
Figure of speech. Sorry.
No, like
liquidity tsunami.
They are. And the other part is that when a tsunami comes in, the water level always drops first before the water actually comes in. So,
yep.
like, those are the two things that I always keep in mind. I actually do think about this a lot. Not like being in a tsunami, but when it comes to people talking about this, yes, if there is any kind of major problem, we've seen it before, that the Fed and Treasury will, do whatever it takes, however you want to phrase it, to make sure that capital markets continue to function. But first, the water level has to go out.
Does it? Or are they at the point where they're responding preemptively? I'm trying to think about the timing last year.
Things got a little bit gnarly. I mean, like, if you go and take a look at the S&P 500 and how this all unfolded, the S&P 500 was at about 4,100, and by the time the Fed went and backstopped things, it got down to around 3,800. So it was a 7-8% drop.
But we now know they will. We've known this for a while. Why would stocks go down at all? If we know the Fed's going to jump in and save the day.
Mark, what happened to you?
What do you mean?
No,
this is a very cynical opinion.
No, I know. I guess. No, it's. No, I'm just trying to think through this here for a second. So what? I'm not saying that this is what you believe.
I'm iterating expectations, as statisticians like to say.
Yeah. So what you are saying is, in theory, if there's anything that is truly a significant calamity,
potentially systemic, Fed prevents the systemic crisis.
Well, here, Okay, here's why I think things have to go down first. And here's why I was just in shock for a moment there. I realize you're not expressing your own preferred view, but just the view of, kind of how the market is
thinking
seen
about
to
how
operate.
the average market participant might react. Yeah.
In order for something to become known as systemic, it has to be felt as systemic first. Because if nothing actually, let's say that you have Bank of America, just as an example, and everyone all of a sudden becomes concerned that Bank of America is going to fail, which I'm not saying that they will, but let's say that everyone suddenly becomes concerned. If you don't actually see any movement in markets that requires the Fed to do anything, because everyone says, well, the Fed will just do this, then the Fed doesn't need to do it.
They may not need to actually do it. The threat, if you like.
But then you also end up with
enough.
this. You just have to. I'm just thinking through the reflexivity of the whole thing. But then if we know that the Fed won't necessarily do it, if they don't need to, then things do have to move down in order to prove that they need to. And so you always end up getting the sell-off, in my opinion.
There's a bit of a
first.
paradox. No
It's
evidence.
like time travel.
No evidence is evidence that the Fed was effective. This is a problem that people who measure the effectiveness of policy sometimes have. If the Fed is effective, for example, at staving off a recession, you don't see it in the data.
So no, correct, exactly. So I think when we look at this and talk about the state of play of regional banks right now, the problem that you have on the commercial real estate side is one of non-uniformity. And what I mean by that is if Bank X says that they are making residential loans, we don't know exactly what loans they're making, but in general we can say, hey, they're probably pretty close to the average loans that we're seeing nationwide with some, regional variations where they're a little bit larger in the Northeast, they're a little bit smaller in the Midwest, but a bank that has $100 million in residential loans probably has, a bunch of $300,000 to $800,000 loans that are in there. That's just, that's what happens when you do residential lending.
Okay.
On the other hand, with commercial real estate, it's not a unified market at all. I mean, commercial real estate encompasses the Empire State Building, the strip mall, and the dentist office all under one roof, even though those are not related in any way, shape, or form. And so you end up with things like what happened to New York Community Bank Corp here, where, hey, they had to take a $120 million plus charge off on one property. And the problem is, unless you actually know what each and every regional bank owns, like specifically the properties and the loan terms of them, it's not something where you can just look at the probabilities and say, well, nationally default rates are doing this and credit scores are doing that. No, it could just be one bad loan that's a huge portion of the book, and that starts kind of this chain of events here.
It couldn't be. That would be bad risk management. Their book should be the law of large numbers, if you like. I hate to keep invoking statistical concepts, but they apply in this business because you can't dig into every bank's book and have a good sense of what's going on. Averages, you have to rely on averages at some point. That would be very bad risk management, what you just described, it seems to me.
Which seems to be kind of the hallmark of this because, again, the assets they absorbed were from point. Signature Bank, which does everyone...
Not known for its risk management.
Does everyone remember the stuff that Signature Bank was financing? There's a whole bunch of crypto development. Now, there was obviously other stuff in there as well, but, you kind of say, why would you take this on? I guess maybe it was kind of forced on you. But the other piece is, okay, you've absorbed all of this. You're now a bank with over $100 billion in assets. How have you not been managing the risk of a much larger issue now that you are a much larger bank? And that's kind of problematic as well when we talk about who's asleep at the wheel in this case. Look, regulators kind of made this deal happen in order to save Signature Bank. And it doesn't really look that great for them that the company that they gave it to might not make it a year after having those assets handed to them.
There's an adage that risk doesn't go away. It just gets transferred, diffused, morphed.
I love that one. Yeah, it's one of my favorite sayings.
Isn't it?
It is. So in looking at this, the problem is you don't know who has bad stuff. It's not necessarily a systemic issue, but it could be an issue that causes... If you're looking at regional banks right now, what is the case for saying, yes, this seems like something that I'd like to invest in above all other options available to me in equity markets today?
I've not talked to any active managers that play in this market segment, but offhand, I can't think of a bull case. It would take a lot more punishment for
It's
these
tough,
things
right.
to probably look attractive.
And
There's
that's
probably somebody out there buying these banks up, and you tune into CNBC today, you'll see them talking.
You'll
their
see
book
someone
up.
talking their book.
Yeah.
Absolutely. So it's just something where you look at it and you go, this is a tough business to make money in and to differentiate yourself in to begin with. And now you got this asymmetric downside risk that you don't know if it's present in any of these names. What you kind of sit and ask yourself, you're like, well, what's the point now? Like, maybe just wait until the tide goes out, and then you can see what's there.
That was 2008 writ large. Nobody
Yeah.
knew who to trust. Trust was the key word in that environment, and it applies in a smaller context here.
So I remain unconvinced. I don't know if this is going to become a bigger issue or not, if it's going to become a systemic one. I don't profess to have any unique knowledge on that side of things. I think that it's something that is going to be slow-moving in nature just because the fundamental difference between commercial real estate and residential is you've got these, leases that are scaling, over 5, 10, 7 years. It's not something where all the defaults necessarily hit at once. It's kind of...
There's going to be a lot of pain drawn out.
Yes, it's like the decade of the 2020s might just be one where commercial real estate is just this drag that we're dealing with for the decade.
Well, they don't have to mark. They're not priced by the microsecond like the securities we're used to dealing with, and you're used to dealing with in your 401k or whatever. These things are marked to market, as to use the industry jargon. It means exactly what it sounds like, by appraisers periodically. So if you have a pension fund, you probably own real estate through a real estate manager, and they're only very slowly recognizing the depreciation in these properties. It's a long process.
Let's take a quick break here. When we return, I think that's enough commercial real estate talk for now. Why don't we talk about Boeing? That'll be a nice, fun topic when we come back.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
Planning for your financial future never stops, and with spring on the way, right now is the perfect time to take stock of your overall strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help. It's called 9 Tips to Spring Clean Your Finances. If you're planning a significant purchase either this year or down the road, we've got important information to share that will help you understand the effect it may have on your finances. You may be retired or getting close to retirement, and if so, this guide is for you. Take the necessary time now to review your financial strategy and learn about what adjustments you can make that might benefit your planning. The guide is free, and it's yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. If you've had a successful career and want to make sure you protect your assets, now's the perfect time to create a plan that will allow you to enjoy your retirement years. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. And in it, you'll get educated on important issues like how to avoid probate, passing your assets along to your family, and potentially eliminating your estate taxes. Don't wait. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
The NTSB, the National Transportation Safety Board, who always conducts the investigations of any airline accident or really any aircraft accident in the United States. They also tend to be sent overseas whenever there's an incident as well, just because they're pretty much the best in the world at what they do. They're very, very good. And according to the preliminary report that was issued yesterday regarding the January 5th door plug blowout on the Alaska Airlines Boeing 737 MAX, the door plug does not appear to have contained the 4 bolts that prevent upward movement of said door plug, which is about as damning as it gets for Boeing. It confirms that you didn't put the bolts in the door plug that hold the door plug into the plane, which is kind of a problem.
So where's the failure? Was it a person who was supposed to look at it? Was it a machine that was supposed to make sure each bolt was there?
Boeing documented that the plane left their facility without these.
Somebody checked the box. No,
but they didn't do anything about it.
You can see how it would have happened. It could have been a computer. We just don't know. Was it human error? Was a human being supposed to put eyes on those bolts and nuts and whatever goes into that particular assembly? Was it a computer? Does a robot scan the exterior and make sure that there are no holes? We just don't know where the failure took place. There are, in some of these 737 MAXs, if this is accurate, so forgive me if it's not, but there could be a million individual parts.
Sure.
There's a probability, however small, that each of those parts doesn't work. In some cases, the probabilities are related to one another, so you can't just multiply them together. In other cases, this is just sort of off the top of my head, so if somebody's got a better take on this, please let me know. My point is, there is a non-zero, there's a frighteningly high probability when you consider the magnitude of the consequence of the error, which is death. Frighteningly high probability every time you get on an airplane that something, if there are hundreds of thousands of parts, even on an older plane, something doesn't work correctly, something wasn't installed correctly, something was left unbolted in this case.
And
I don't mean to sound insensitive, but there's a word for this. Sociologists call it normal accidents. They happen in nuclear power plants. They happen in simpler domains too. Most conspicuous example in our lifetimes or this generation is the space shuttle, the failure of the O-ring under low temperatures. Classic normal accidents case.
Well, I think so. There's actually a great tie in there. I'm glad that you brought that up, because if you talk to anyone who works in the aviation industry, they'll tell you, look, on basically every flight, there is something that goes wrong. And the way they mitigate it is through a few different things. The first is through redundancies. You basically want to always have systems that do not have single points of failure. So you'll have multiple sensors on a plane that measure the same thing. You'll have backup systems in case your primary systems fail, things along those lines. So that's the first thing that you do. The second piece is the process for maintenance and repairs is also meticulous because human error happens as well. Like, human error is inevitable. It's something that
thus normal accidents.
You expect it to happen because we're human. No one is perfect. And so if you look at the processes that you go through when you are looking at commercial aviation, it's something where there is a dedicated log of all maintenance that is requested by the previous crew, that is then completed by the maintenance crew, and that is then inspected by the subsequent crew coming on to say, yes, this was actually addressed the way that it needed to be. And if the pilot is not comfortable with the way that the maintenance has been done, they have the authority, and they do in a number of cases, to say, no, this plane is not getting off the ground in this condition. And that's where you end up with, hey, we've got a maintenance problem. We got to go swap for another plane.
Yeah,
That's why those things happen.
I think what makes this so appalling is that it's so obvious to us. My God, I attach nuts to bolts all the time. You're assembling outdoor equipment. You're doing a project indoors. We all do it. It's so obvious that you could see it would be easy to overlook. It's like meticulously.
They didn't even overlook it, though. That's the thing.
Well, how do you know they didn't? How do you know the box wasn't checked as a matter of?
There was a report from the Seattle Times last week that said, like, that had documentation from Boeing saying that the plane left its facility without the bolts in place.
Oh, I'm sorry. So this was actually
yes,
okay.
it was confirmed
and then so somebody failed
by
to
a
follow
whistleblower.
up on a report.
Yes.
Oh, okay.
So Boeing
Thank
knew
you.
that the plane left its facility without the bolts in place, and still didn't do anything.
So the report didn't get flagged.
So, like, this is
okay.
And this is the crux of the
well,
problem
that's
to
another
me,
failure.
which is, hey, you actually did the legwork to say there's a problem here, but somehow the connection got lost and you didn't address it. And this gets back to the Challenger flight that exploded tragically. It didn't happen just because of that flight. What happened is on previous flights of other space shuttles, NASA kept pushing the limit of saying, yeah, we can launch with this temperature and there's no problem in this temperature and so on and so forth. And eventually when you push those limits far enough, you get to the point where you've gone too far. And that happened with the Challenger, unfortunately. And it's happened with Boeing in terms of their desire to get so many airplanes out the door in a given month. You've finally gotten to the point now where I just don't think that they have the processes in place that are needed there. Let's take a quick break here. When we return, we're going to have Wall Street Watch. We're going to be joined by Todd Lutsky from Cushing & Dolan right after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, what happens if you don't have a healthcare proxy in place and your spouse needs nursing home care?
So this is a basic document that we don't talk about as much as we should. It allows you to appoint somebody else to make a medical decision for you. And by the way, it's not just one medical decision. It could be any number of things, from prescription drugs to doing a surgery. And yes, the most important one, which is, hey, if all hope is lost, I don't want to, be on a machine. But that's the basics, and you do need it for that. But the bigger point is, if you enter a nursing home and you don't have one of these, you're not going to be able to admit them. You're going to have to go get a guardianship in order to admit them to the nursing home, because they're not going to allow you to do that. So very important that you have one for that. Now, guardianships are time consuming and expensive. You got to hire a lawyer. You got to go through a lot of nonsense, right? If you have this basic document, which you should have for anyway, just for your basic purposes, having it not only for those reasons, but to help you get into a nursing home if you need to, is essential.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request the brand new guide from Cushing & Dolan. It's called Back to the Basics. 866-848-5699, or you can request it from their website, legalexchangeshow.com. Cushing & Dolan have been helping families like yours for more than 30 years. Call 866-848-5699 or request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in positive territory as Wall Street digests comments from several Fed officials regarding interest rates, while traders also react to a new batch of fourth quarter earnings. At the moment, the Dow is up by nearly 0.5% or 176 points. S&P 500 is up by 0.75% or 37 points, and the Nasdaq up nearly 1% or 142 points. Russell 2000 off by 0.33%. 10-year Treasury yield flat at 4.10%, and crude oil up nearly 0.5%, trading at $73.64 a barrel. Snap shares plunging by 32% after the social media company reported slower user growth and revenue that missed street forecasts. In a letter to investors, the parent company to Snapchat said it remained focused on investing in its direct response business to deliver increased return on ad spend from its advertising partners. Meanwhile, Ford shares up by 3% after the Detroit car maker said it saw strong truck sales and noted recent cost-cutting would boost its profit in 2024. Elsewhere, Uber posted its first full-year profit as a public company and projected continued growth this quarter. Despite that, shares off by 1%. Alibaba approved a $25 billion increase to its stock buyback program through March of 2027. However, the Chinese e-commerce giant posted underwhelming sales growth and a sink in profit in the previous quarter. That stock off by 6%. CVS Health posted strong quarterly earnings but trimmed its projected results for this year. CVS shares up by 2.5%, and after the closing bell, we'll see fourth quarter results from Disney, News Corp, and PayPal. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing & Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
We're joined now by Todd Lutsky from the law firm of Cushing and Dolan. We call the segment Ask Todd because you get to ask Todd whatever question you want about estate planning. It could be your estate plan, it could be a family member's estate plan, it could be an estate plan that you've yet to create. Phone line here is 888-205-2263, so get calling so that you can make sure you get in line to ask Todd your question. That number again is 888-205-2263. 2263. And again, we'll get to your questions in just a little bit. 888-205-2263. Get calling, and we'll get to you soon. Mr. Lutsky, thank you for joining us today.
Always a pleasure.
I was talking with my dad last night.
You were? What's
going
on?
Well, he doesn't believe in pencil sharpeners.
No?
He thinks the only way to really sharpen a pencil is to do it with a knife by hand.
A knife by hand.
And I got to say, he makes a good point.
He does. Yeah, that's true.
He does. Todd, let's talk a little bit about just what's probably a dumb question, but is actually a really smart question. So I guess it's a smart question.
Yeah.
How do you actually go about picking an estate planning attorney? I mean, there are thousands of them out there. How do you pick the right one?
Yeah, and I think that's a great way to look at beginning the estate plan, and it certainly leads into the guide we're giving away this month, which is the Back to the Basics. When I say back to the basics, that's part of it. If you want to get started, how do you get started? Obviously, you need to learn about the basics of estate planning, but you want to pick a lawyer. I have a 4-pronged test that I use, that you should use, or could use. Basically, you go into an attorney's office and you get the card. And the card will have the name on it, and it'll probably have the letters ESQ after their name. I think you should look a little deeper and see if there's 3 more letters in LLM.
What's that stand for?
Name. It's a Master's in Legal Letters for Taxation. I know it's LLM, not MLL, but that's the way it is.
Sure.
Law is always backwards. So it's an LLM in taxation, and they should have that because if you're going to do estate planning, it's all about taxes. And if you don't know taxes inside and out, you might not be the best estate planner. I'm not saying you're not. You still can be good, but to me, that's one thing to look at. Now, secondly, you say they don't really know why you're asking the question, but I would say, so how many, hours in your year do you spend doing estate planning? Good question. And they don't know why you're asking it. And the attorney might say, 70%. Okay, probably leave. Right?
Even at 70%?
Yeah. 100% of the time should be the answer.
Okay.
I really should. I mean, this is, if you ever try to follow the Internal Revenue Code, it's not easy. I mean, it's hard for me to keep up, and that's what I do. I mean, to do other things and try and keep up with the Internal Revenue Code, I got to tell you, is hard. So, that's just, again, these are my rules of thumb. They're not anyone else's. And a couple other questions I would say, next, let's say you get into the estate plan and you start having the estate plan. And the attorney maybe does their planning, goes to a whiteboard. I don't know if they go to a whiteboard. I certainly go to a whiteboard. I draw pictures. I explain everything. And if they do that for you, and you leave more confused than when you came in, probably not a good idea.
Okay.
Maybe I'm looking at a second opinion. And fourth, cost. How much does it cost? Now, of course, it varies depending on what needs to be done, and I get that. But if they say hourly, I'd be a little leery, right? I'd go with flat fee. So, again, I don't know the numbers, but I'd go with a flat fee approach. So those are kind of my 4 prongs when I'm trying to pick an estate planning lawyer, and I live and die by that same analysis. Use it on me if you want to.
Talking with Todd Lutsky from the law firm of Cushing & Dolan. If you have a question for Todd, the studio line here is 888-205-2263. This is your opportunity to ask him your estate planning questions live on air right now. That phone number is 888-205-2263. We're going to take a quick break here, but when we come back, we're going to get right to your questions with Todd. One last time, that phone number is 888-205-2263.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you've had a successful career and want to make sure you protect your assets, now's the perfect time to create a plan that will allow you to enjoy your retirement years. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. And in it, you'll get educated on important issues like how to avoid probate, passing your assets along to your family, and potentially eliminating your estate taxes. Don't wait. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
Hi, guys.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
Talking with Todd Lutsky, let's get right to your questions with him. First up, we got Jack in Waterbury. Jack, what's your question for Todd?
Okay, there's a large group of us in the country now. We're called senior orphans. We're people that have outlived family and friends. If you write a will, who can you name as a candidate to administer your estate? For example, some states, there are some states I know that have created agencies that do exactly that, but the last time I checked, Connecticut has not. What can we do?
Yeah, and I'm not sure which states have those agencies or not. It is interesting to hear about senior orphans. I've never really heard that, but I guess I like the term. If you have no friends left because you've kind of outgrown a lot of the friends, I mean, I guess the first question is, and no family, who are we leaving assets to? So, if there's anybody you want to leave your asset to, I always want to look to people before I start looking to institutions or agencies like banks or brokerage houses, or, I want to stay away from the institutional investor, which is an option for you, by the way, an institutional trustee, but I try to find beneficiaries. So if there's a human that you're leaving assets to, maybe it's a niece, maybe it's a nephew, maybe it's a cousin, well, maybe you put them on to serve as personal representative or trustee of a trust if you're going to do it. So I'd look there. Secondly, I would probably say, well, I've got an accountant who prepares my tax returns. Well, the accountant probably knows how to do these things, or maybe the estate planning lawyer. Again, last resort. But at least the accountants and the lawyers understand the way to be a personal representative or to be a trustee. They understand the tax ramifications. They understand why a trust works and how it should work. So, a good option. 3, I would say, you could always look to the institutional investors or institutional trustees. Again, not overly thrilled with that idea, but it could be there. And you mentioned something that I didn't even know existed, where there's these apparently agencies that can serve. But I'd stick with, try to find that person if you can. Again, think about who you're leaving the assets to, and maybe one of those people can serve. So I don't know that I've solved your problem, but I hope I've given you some food for thought on that. And folks, that's a great question, because that's exactly what I'm talking about in my new guide, Back to the Basics. What I love about this is it's basically, if you get this guide, it's as if you sat in a meeting with me and had an initial consultation, because it's basically an engagement letter. It explains a fact pattern. It explains an entire recommendation for an estate plan, from the wills to the health cares to the powers of attorney to a trust, to how the trusts work. It talks about funding the trust, how to put the assets inside the box. It explains about fiduciaries, like this Jack was calling, trustees and healthcare proxies, and who they should be. And to me, it's basically going to help you figure out whether or not estate planning is right for you. You could put your fact pattern into this letter and see if it actually is a good recommendation for you. If not, at least it'll educate you on how to get started. Folks, Back to the Basics, new guide for the month, 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com.
Todd, I've got another one for you here. Let's go to Jeff in Florida. Jeff, what's your question for Todd Lutsky?
Oh, thanks for taking my call. And, Todd, thank you every week for doing this. It's valuable information. I'm sure we all really appreciate it.
Thank you.
My question is this. An irrevocable trust My parents set up a trust for the kids.
Mm-hmm.
They being the grantor, we being the beneficiaries about 20 years ago. And in that irrevocable trust, they put a bunch of securities, which have gone up in value. We're sitting at about a 70% gain.
Mm-hmm.
Now, it's my understanding that irrevocable trusts do not have a stepped-up cost basis upon the passing of the grantor.
Mm-hmm.
So we would be subject to heavy taxes in that irrevocable trust. My question is...
Let me stop you because that's a fallacy. So, and maybe you're right. I didn't draft the trust, but let me just interject here just because it's important. And I still want you to ask your question, so hold on a second. This is important for everybody out there. This is why this question is such a good one. The irrevocable Medicaid trusts that I talk about a lot, that we prepare at Cushing and Dolan, right? They are irrevocable, but there are many, many kinds of irrevocable trusts. And, Jeff, I'm not sure yet whether or not your kind that you have is one that is going to do this or not. But the way we draft our Medicaid irrevocable trusts they are incomplete gifts for gift tax purposes, and you retain mom and dads of the world, maybe your mom and dads of the world, retain the right to the income, among other things. And if you give away an asset and retain the right to the income, 2036 of the code says that causes the asset to be included in your estate for estate tax purposes because you did not cut the string. You kept that right to that income, so it pulls the whole asset back into the estate, not probate, but back into the gross estate. And why that's important, full step up in basis, eliminating the built-in gain on everything in there from stocks to real estate to rental properties. So my question to you, Jeff, is do your parents in that trust have the right to the income during their life?
I do not believe so, because my knowledge is that we have to do something because we're going to be hit with that stepped-up cost. We're not going to have the stepped-up cost basis. So
well, you better check
my question is, can they, when they are getting sick or they feel that, they're getting to the end, could they take money from their personal trust, let's say cash, and swap out the stocks for the cash so the stocks are sitting in their trust account and will be part of their estate, so when they pass, those stocks will get the stepped-up cost basis?
Let me ask you this. I'm going to answer that in a second, but let me ask you this. Do you think your parents Mass residents?
No, right now they're in Florida. My mom passed away about 2 years ago, and my dad is in a assisted living. So
do you think they're worth more than $7 million?
Yes.
Okay. So maybe they did do some planning to get assets out of the estate. So for higher net worth clients, when we do irrevocable trust to get assets out of the estate so all the growth can be out of the estate, yes, that would receive no step up in basis. You trade off the capital gains tax for the estate tax savings. However, what they might not have known 20 years ago, and who would have, that the estate exemption would be as high as it is today. So because it's a $13.6 million exemption, we do make our irrevocable trusts with a 675 4C swap power in there, which simply means exactly what you said. The donor, mom and dads of the world, are able to reach into the trust and pull out assets as long as they put back assets of equivalent value. So if they have $5 million of stock in there and they want to pull out $5 million and put $5 million in cash in, home run, because now the assets in their estate will get the step up in basis. So yes, look for that 675 4C power, a wonderful way to get a double bonus here from the planning that they did.
Mr. Lutsky, thank you so much for the time today.
Always a pleasure.
The views expressed in this segment are solely those of Cushing and Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated. This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing and Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. CushingandDolan.com. If you've had a successful career and want to make sure you protect your assets, now's the perfect time to create a plan that will allow you to enjoy your retirement years. Cushing and Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. And in it, you'll get educated on important issues like how to avoid probate, passing your assets along to your family, and potentially eliminating your estate taxes. Don't wait. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing and Dolan have been helping families like yours for 30 years. Let them help you too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com.
Still a lot to come as we continue through today's show. We're going to be talking a little bit about the latest signals from the Fed as it relates to interest rates and whether or not any cuts, hikes, or, well, I guess those are kind of the options. I guess they could keep things the same. But we'll talk a little bit about whether any cuts or hikes are on the table in the near future. Also, a little bit of streaming news from the sports world with a new partnership being formed. And then a little bit of chatter about China and the United States and whether or not what we're going through is really a decoupling or just feel like it with not much actually happening there. So, still a whole lot more to come on the Financial Exchange. Stick around. It's coming up in just a little bit. Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, one of the things people need to look at starting out a year is whether or not they expect a major shift in their income, either higher or lower.
Yeah, I mean, a lot has changed in terms of how we work and just family dynamics over the last few years coming out of the pandemic, and you've seen a lot of people jump back into the labor force that might have gotten out or the opposite of that. And certainly it comes and impacts everything from 401k contributions to how much you're going to be able to save and put out for the next year. And so just understanding where the income side of that budget is going to land for 2024 and doing that evaluation is an important step of the process.
The other piece to pay attention to is the expense side of things, in particular if you have one-time expenses that are going to be coming up, if you need work done on the house, if you've got car expenses or anything else, making sure you plan for that as well.
Well, how are you going to finance it? Do I have an emergency fund? Am I going to borrow money for a home improvement that I'm doing? Maybe I'm already retired and I'm on a fixed monthly budget from Social Security and maybe a pension, and I've got some big expense coming up. You might need to realign your portfolio for that coming expense. And so really just, again, comes mainly down to budgeting here, but thinking about where those income and expense numbers are going to land for the full year.
Our guide is titled 9 Tips to Spring Clean Your Finances, and you can request it 2 different ways. The first is by visiting ArmstrongAdvisory.com. The second is by calling 800-393-4001. That number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it, and your property. If you owe the IRS back taxes or you haven't filed in a while, the tax relief line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to 0. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to 0 due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today, or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESI is there as your partner. the Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Little bit after 11 o'clock here, and it's Chuck, Mark, and Tucker. The Dow Jones Industrial Average is up 157 point-a-roonies. S&P 500's up 33. The NASDAQ's up 112, so all three major U.S. indices. In the green, the Russell 2000 lagging, being dragged by regional banks, it appears, down about 0.25% right now. We've got the 10-year U.S. Treasury flat today at 4.09%. We've got oil, West Texas Intermediate, up 12 cents a barrel to 73.43. AAA national average for gas prices holding pretty steady, right at 3.14 and 0.8, up 0.3 of a cent from yesterday, and basically at the same spot it was a week ago, though up from earlier this year where we were around the 3.06 to 3.08 range for a couple of weeks. Gold, the yellow metal, it's up $3.50 an ounce to $2,054.90. And that is what is moving in markets today. In terms of any big movers in the S&P 500, not a ton going on at the moment, but you got Amgen down about 4%. That's kind of leading the way down or lag. Would it be leading or lagging the way? Can we invent the phrase lagging the way?
You said leading the way down, right?
Yeah, but I prefer lagging the way down.
Well, then that would imply it was behind, which it isn't.
Well, it is behind. Behind everything else. It's lagging the way down.
In an absolute, if down is negative and you are lagging, yeah, I guess it depends on whether you're thinking of it in absolute or relative.
It depends
terms.
if you're looking at the market upside down or right side up.
Yeah, exactly. It does.
You know, so we got that we got to sort through. Big winners today. Chipotle is up about 8%, and then we've also got Palo Alto Networks up about 7% today as well. Mark, we've got all this talk this year about the interest rate cuts are coming. I mean, I've seen surveys out there.
Really,
where
I haven't heard that, Chuck.
I finally got this coming through recently, and
they're so subtle.
I've seen surveys out there where it's like 95 to 97% of market participants expect the Fed funds rate to be under 5% by year end, which, if everything continues to go right, is absolutely true. If the next 12 months look like the last 6, then you will have cuts by year end. But that also requires extrapolation of the last 6 months, kind of going forth through the rest of 2024. Your thoughts?
Inflation's come down a lot over the past 18 months. The consensus seems to be it's due mainly to the opposite of the forces that pushed it way up in 2021 and 2022. Supply chain snarl-ups, energy price spikes. Researchers call these things relative price changes or just supply shocks very, very generally. So you had bad supply shocks pushing prices up and maybe some demand shocks too. All those stimulus checks sent out by the Trump and Biden administrations pushed up demand when supply was constrained. So both supply and demand were to blame. The supply factors have been working in our favor over the past year and a half. That's brought inflation down to, in headline year-over-year terms, about 3%. The big question is is underlying inflation, which is a function of long-term economic forces. And you can measure it using the output gap, the difference between what GDP has been clocking in at, which is very high, relative to potential GDP, which is more modest. Thus, the phrase output gap. You can look at unemployment. You can look at the JOLTS report, which we talk about, vacancies report. All of these things point to an economy that could be running hot. Historically, the Fed wouldn't be talking about cutting rates right now. The risks, as some people put it, between unemployment and price stability or inflation, which are the Fed's two legally mandated objectives, seem to be roughly evenly balanced. Powell, in fact, said this last week. So if they are indeed equally balanced, it would be weird if they were cutting rates in that environment, because you don't want to stoke demand. That could put upward pressure on prices. But if inflation's not going up, you might be at that elusive, unobservable, but powerful normal or natural rate of interest, a concept we talk about a lot, comes out of economists' models because it's the rate that sort of solves for a stable inflation rate, but it gets plucked out of context and used casually. But we can go with it. One way of knowing whether or not the Fed's doing the right thing is whether or not inflation's accelerating and unemployment is stable. If inflation and unemployment are both stable, you're almost by definition, at least the way economists think about these things, you're by definition at the natural or neutral rate of interest. Which brings me back to the point that started this little discussion. Fed officials should just shut up. We don't know, and I mean this sincerely. I know. It may be funny, and I smirk when I'm saying it. But folks, shut up. You're not informing the discussion. You're confusing it. They each have a different framework. They're usually not they're not great teachers for the most part. They don't explain what the framework is. They don't explain what causes inflation in the long run versus short-run supply shocks that can move it up or down sharply but aren't reflective of whether or not policy is too tight or too liberal. They don't give us a framework into what they are thinking as lay people.
Sure.
Economists get it. They know what type of models they're using, and they have a general sense of what they say implies for those models and therefore what they will do. But most people, I think, are just confused by all the Fed talk. They ought to shut up. They ought to let one person do the talking. Committing to being data dependent is fine because, again, we don't know what the right neutral rate is. You have to infer it from what other variables are doing. So just saying we're watching those and right now the risks appear balanced should be enough. But that's not the world we live in.
So I think that when we look at the state of inflation right now and talk about how we've gotten here, you mentioned, it's a lot of people view it as kind of the unwinding of everything that happened in...
It could be thought of as reversal of those effects.
I'm going to throw something at you here, and it's going to sound like a joke, but it's not.
I won't laugh.
You never do. What about the reversal of the reversal?
Yeah.
And what I mean by this is, so what we just went through is what's known as the bullwhip effect. And you think about it, so you raise a whip, and it's, okay, this hump goes up, and then it travels through and then comes back down. And that's the bullwhip effect as we think of it. But you also have kind of the secondary wave that then follows it. And one thing that I've been watching over the last couple quarters, we just got some data this morning as it relates to imports and exports, balance of trade. And I just want to show you something that I find interesting because I think it's.
When am I supposed to laugh? Did I miss the cue?
That was the joke.
The bullwhip effect?
No, the reversal of the reversal.
Oh.
You were already laughing from me saying that you never laugh, so it didn't land, which means that once again you didn't laugh.
No, I followed you. I'm too literal. You're talking to somebody who's on the spectrum here, so I'm too literal.
So if we go back and look almost a year ago, April of last year, just as an example, this is what we were seeing in terms of the change in imports year over year from some different countries. Vietnam, which we were talking about as kind of a replacement for China in some respects. Imports were down 21%. India, imports were down 12%. South Korea, imports were down 1%. So these are all, big feeders for American industry and American purchases at this point. These are some of the biggest countries by trade in terms of imports. I mean, you go through the list here, and Vietnam right now is 1, 2, 3, 4, 5. It's the 6th biggest. South Korea is the 7th biggest. India is the 9th biggest. I didn't include places like Mexico because that's more food and things like that, and I didn't include Canada because that's a lot of energy with
syrup.
I'm looking for things that people buy. think about the stuff that you buy where you open it up and you're like, what is it? Where does it come from? It comes from South Korea. It comes from Vietnam. It says India on the label. That's what I was thinking to get here.
Yeah.
The latest data for December. Year-over-year increase in imports from Vietnam, up 12%. Year-over-year increase in imports from India, up 9%. Year-over-year increase in imports from South Korea, up 5.5%. The bullwhip that, went down and basically took us from, hey, everyone wants a grill to everyone has a grill, is now kind of normalizing. And what I'm trying to figure out is this a one-time thing here where it's just, hey, inventories have been destocked and now they're just kind of restocking to normal levels? Because if you have this demand that's coming through again, one of the tailwinds that's helped inflation get this low is the fact there's been really no goods inflation and very low demand on that side. If that's reversing, you got something to pay attention to.
It may not reverse, but it will subside. The 90s are a good example. 90s were we experienced a series of very favorable supply shocks. Energy prices came down through 98 anyway, then they went back up a little bit, and that's when inflation started to tick up. Healthcare premiums, people will remember, came down as HMOs put downward pressure on prices for healthcare. Insurance premiums. Stocks went up, so companies' pension plan costs went down. That helped keep a lid on compensation. A series of favorable supply shocks gave us the miracle economy of the late 90s. Those trends somewhat reversed in the early 2000s. Energy prices going back up. Healthcare costs started to creep back up. Said differently, what supply shocks giveth, they can taketh away, and they don't persist forever, which is why I worry about underlying forces that tend to put upward pressure on prices. This is captured by the so-called Phillips curve, which is kind of an egghead concept, but a really neat and simple way of thinking about whether or not the economy's running too hot. I suspect that'll become relevant again.
Let's take a quick break here. When we come back, we've got trivia, and then we're talking about how today's retirees are kind of redefining what it looks like to retire.
Breaking business news as it happens, only here on the Financial Exchange Radio Network. The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Planning for your financial future never stops, and with spring on the way, right now is the perfect time to take stock of your overall strategy. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and our new guide may help. It's called 9 Tips to Spring Clean Your Finances. If you're planning a significant purchase either this year or down the road, we've got important information to share that will help you understand the effect it may have on your finances. You may be retired or getting close to retirement, and if so, this guide is for you. Take the necessary time now to review your financial strategy and learn about what adjustments you can make that might benefit your planning. The guide is free and it's yours today by calling 800-393-4001. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. If you've had a successful career and want to make sure you protect your assets, now's the perfect time to create a plan that will allow you to enjoy your retirement years. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. And in it, you'll get educated on important issues like how to avoid probate, passing your assets along to your family, and potentially eliminating your estate taxes. Don't wait. This free guide has all the information you need to build a safe and secure estate plan that will give you peace of mind as you close in on retirement. Call 866-848-5699 right now and request your free guide today. You can also request a no-obligation consultation to review any current planning you've done. Cushing & Dolan have been helping families like yours for 30 years. Let them help you too. Get their new guide called Back to the Basics today. Call 866-848-5699 or request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
All right, trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited, dine in only. Well, yesterday, Coca-Cola introduced a new flavor, Coca-Cola Spiced, whatever the hell that is. This is the first new permanent flavor addition to the Coke lineup in 3 years. Once upon a time, Coca-Cola was losing to Pepsi at supermarkets and decided to change their formula and introduced New Coke. New Coke was a complete disaster. It would only last 79 days before the company reverted back to the original formula. Trivia question today: what year was New Coke introduced and discontinued? Once again, what year was New Coke introduced and discontinued? Be the sixth person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385. And the sixth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Piece in the Wall Street Journal, Mark. It's titled, America has never had so many 65-year-olds. They're redefining the milestone. How are they doing it? What are they doing that's so unique? What's the redefinition about?
Well, the article gives a number of examples. To me, a firsthand witness to this, not because it's my age group, not quite, but seeing my parents go through it and people in their circles.
Yeah.
Obviously more active than ever before and doing activities that were traditionally reserved for younger people, I think, is how I'd kind of sum it all up.
Biggest change here is just people working longer. And that obviously, some of that is by choice. Some of it, unfortunately, is not by choice because of, recent recessions or poor saving habits or whatever it might be that have led a number of people to need to work longer. And so that, I think, is one of the big things there. It's also coupled with just absolutely, mesmerizing levels of overall wealth concentrated amongst the baby boomers right now. It's one of the most fascinating developments that I think we'll have to watch over the next decade is the removal of a lot of those folks from the workforce, because again, even though higher numbers are working, it still is not like everyone continues to work into their 60s and 70s, but you still have all this spending power, even though you no longer have the ability to, or the desire to, work on the other side of that. And so it's something that's fascinating, because we've never had so much wealth concentrated amongst a group that is not going to be working. And how do those demographics affect the economy over the next decade there? Because you still have a bunch of spending that'll come from that group, but not necessarily the work to support that spending. I'm not trying to make the point that like boomers should work till they're 80. What I'm trying to say is, typically we think of spending power as being largely tied to working. And for this group, for the first time in history, there's a huge amount of wealth that's not tied to actively working anymore. And I don't know what that means for things that have previously been true in the U.S. economy.
Yeah, I don't know what their spending patterns will be like. I don't know what my own will be like. And their preferences will change as our preferences, I should say, change as we age. It's hard to, I think. So are you getting at the possibility of, I don't know, short-term shortages and things? Like not enough supply to satisfy the demand? So a supply-demand imbalance? Is that where you're going? I'm
getting at specifically in the labor market.
Yeah.
Potentially a shortage of labor.
Okay. So good for wages.
And with that, it being good for wages, but potentially bad for inflation.
Yeah, anything that's good for wages, all else equal, if it's not good for productivity, I guess would be bad for inflation. So would I thought you were going at it from a demand angle. So there's a supply angle. That's a supply
it's kind of both.
Consideration.
Yeah.
The labor force supply is a supply more generally consideration. Then there's the demand part of it. These folks have a lot of money to spend. They're driving up the prices for stuff that, I don't know, to the extent that it's imported, I guess it's not going to be an issue because we've got a bottomless reservoir in Southeast Asia of people who can make stuff for us. It'll be interesting to see how it plays out. Could it be inflationary? I suppose it could, but again, long term, but that's only in the very short term. Even the supply shocks that we talked about in the last segment, those affect the average price, which is what inflation is, because I know I say this all the time, but it's a great little model that researchers use. Some prices are sticky in the short term. Oil ain't one of those prices. So think about oil bouncing around. And think about everybody else's prices. If you're a small business person, how often do you change your prices? Not that often, probably, unless the guy across the street does, and then that's a relative price thing, which is
a restaurant prefers not to change its prices.
The name is actually menu cost. That's what economists call it, because it comes from changing menus. It used to be, it's not expensive today in the digital age, but that's the expression for it. It's now more or less a figure of speech. So there's menu costs. That creates friction. Some prices move. Others don't because of, we'll just call them menu costs, even though not every business has a menu, but it's a really nice metaphor. So you get inflation in the short term. But in the longer term, inflation is because the Fed screwed something up, made too much money in the longer term. But in the short term, it could be inflationary as the economy adapts to the habits of the of older folks, and we're all getting there.
So it's something that I
know. This is something you bring up a lot. The implications for labor and
I've been starting
prices.
to get hooked on we've heard for a while about these long-term demographic trends that usually don't matter in the short term because they're long-term trends. 10 years ago, okay, who cares about the birth rate right now because you still have more people coming into the workforce than people exiting pre-baby boomer. Now you're starting to see a shift there, and it's just something that we haven't seen in a couple decades, and so I just kind of wonder.
Well, nobody knows
what it looks like.
This is the longest people have ever lived, where by definition almost, well, thank God we grew up after the Industrial Revolution. We wouldn't be saying this 500 years ago.
Yeah. Let's take a quick break here. When we come back, we've got our trivia answer, and then
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
The Financial Exchange and Veterans Development Corporation are proud partners of the Disabled American Veterans Department of Massachusetts. The DAV provides thousands of hours of voluntary services at our DAV medical centers and is the only DAV department in the country to lead a veterans housing initiative for single veterans and for those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit davma.org. That's davma.org. Protecting your assets is the key to a sound estate plan. Cushing & Dolan's new guide is called Back to the Basics, a complete guide to an estate and asset protection plan. In it, you'll learn about important issues like avoiding probate and potentially eliminating your estate taxes. Call 866-848-5699 right now and request your free guide today. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the basics of estate planning. Todd, Massachusetts recently raised their estate tax exemption to $2 million. Do people still have to plan?
Yes, it's a simple answer is yes, but let's think about it from a back to the basics standpoint, right? Some people think they don't even need a will, or if they have a will, that's all they need. First, I want you to know that a will is a won't. It won't avoid probate. It won't help you reduce estate taxes, which we're talking about. It won't help you protect assets from the nursing home, so it won't do a lot. So a will is really a won't, so please don't stop with a will. The reason you need to do a trust is this new exemption that you speak of went from $1 million to $2 million. So now with a trust, you are able to double that exemption by being a married couple and having a trust in place. You can shelter $2 million on the first death and $2 million on the second death to shelter $4 million. But you need a trust to do it. And while the exemption went up, which is good news, the cost of not planning just doubled. So very important to get your trusts in place.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Back to the Basics. Call 866-848-5699 or visit LegalExchangeShow.com to request it. Cushing & Dolan have been helping families like yours for more than 30 years. Once again, the phone number 866-848-5699 or request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
Trivia question was, what year was New Coke introduced and discontinued? That would be 1985. Coca-Cola announced new Coke to the masses on April 25th of 1985, and 79 days later, the company held a press conference to announce the return of the original Coca-Cola formula. Susan from Bedford, New Hampshire, is taking home our Financial Exchange Show t-shirt. And Susan is also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood, void where prohibited, dine-in only.
News breaking yesterday that ESPN, Fox Corporation, and Warner Brothers Discovery, they're going to team up, guys, to make a supersized sports streaming service. That's 4 S's in a row. More importantly, it would seem to me, and I've been saying this for a while, we're reinventing cable. Because that's what this is. They've now also today, the rumor is that this is going to cost more than $40 a month, which is not surprising because sports stations always charge the highest rights fees out of any cable channels. That's where the bulk of your cable cost comes from is, ESPN. It doesn't come from, I don't know, whatever the heck channel 9062 is. It comes from ESPN and TNT and those guys, but mostly ESPN. The ESPN is the highest rights fees out of any cable channel. And I just don't know why we're doing this, quite honestly.
Well, yeah, because like you said, it's just like, well, why don't I just have cable? But I keep coming back to, there's got to be a reason all of these networks are doing this.
They think they can make money, but none of them can. And I don't understand why they're trying to do this, because the cable model was incredibly profitable for them and stable. They didn't have to have their own ad sales networks. The cable companies and local channels do that for them. All they had to do was produce content, collect their rights fees, and call it a day. And now they want to get into, we've got to manage, the server load on our side, and we've got to manage the bandwidth and this and that. We got to sell the ads. We got to do that. And it's not working for them. And it's getting to the point now where it's not working for us as human beings who want to consume this content, because we're literally right now, they're making another bundle. That's what this is. They are bundling content from different companies in one product, which used to be called cable and now is being called a supersized sports streaming service. And it's not good for any of us. The companies are losing money on streaming hand over fist, aside from Netflix. With us, you look at the cost to actually watch what you used to watch on cable. It's getting back to the same cost now. You're pretty much spending the same amount, and now you just got to hop around all these apps instead of just hitting the channel number on your remote control. We're basically going back to it. So let's just save ourselves this whole trouble. And if the problem is really the cable companies, then let's just invent a better cable company. But let's not go through this whole charade of trying to do these things when we're really just inventing the product that we all really liked for a while.
But Chuck, this is early stage digital era stuff. It seems wasteful, as a lot of capitalism does, especially in early innovative stages of new industries. That's a little bit redundant, but you know what I mean. I agree. It's sloppy. It's inconvenient. I personally have tried to maintain arm's length from it, other than a couple of little necessities. Cable will probably come back. The notion of bundling, i.e. cable, as you said, will probably come back around. But to me, it's just the way capitalism arrives at consensus satisfying solutions.
Yeah, look,
it's messy.
I guess they're going to have to burn a bunch of capital to realize, hey, this isn't worth it for anyone. That's kind of where what we've realized after the last 15 years is that everyone's totally cool with cable, except we just want to be able to watch cable shows when we...
On demand.
And I don't know why that is so hard for cable companies to wrap their heads around, but that's all it is. The only thing that we really want is the ability to watch what we want when we want to watch it.
I think my theory without besmirching any cable company executive in particular, is that they're not the brightest of the batch. If you've ever interacted with your local cable company, you've come away frustrated.
I think that's by design.
You think so? Because they want to deter usage of their customer service resources?
They don't want you to cut.
Well,
they don't want you to
if
leave.
If that's the case, they've designed it brilliantly.
You know, think about how hard it is to...
Because you dread calling the cable company.
You're like, oh, I got to take all these boxes back to some random facility that's only open 3 hours a day, 2 days a week. I mean...
It could be intentional, yeah.
So
I always figured they're just run like a utility, sort of
Yeah.
sleepy. You don't get people who are looking to shake up the world to run them. They're satisfied with...
I think that's what you get at the local
Don't get me wrong,
level.
I would take the job.
But I mean, like, if you talk about what the cable companies do really well, I mean, they're powerhouses at selling ads. Like that's what the real business is. And that's where they're very well staffed and very smart. Like that's where the meat of the operation is. Hey, we sell a ton of ads, and this is what we do. And yeah, we're gonna understaff the customer service department because we don't want you to take your cable boxes back. We're gonna make it the only place where it's harder to get rid of a service is the gym membership, where you have to go in to cancel your gym membership. It's like, no, if I was going in on a regular basis, I wouldn't be canceling.
Really, as you can tell, I've never belonged to a gym. Just visual inspection, you would know that.
No, you look good.
Thanks. You have to go in to cancel? What, are they trying to shame you?
No, they're trying to make it so that you don't cancel.
Because it's harder to do that type of thing in person?
Well, it's just you have to go out of your way to do it. You can't just call up or you
I don't
can't
know why
just...
this isn't clicking for me. It's like, okay, well, I would just stop in. But, yeah, I could see how the additional step is inconvenient.
It's kind of like momentum. Yeah. If you're not going to begin with, it's going to be harder for you to go to cancel.
Yeah, right.
It's kind of how it is, I think.
Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to visitusvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or family vacation, the U.S. Virgin Islands is everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
The Department of Transportation and National Highway Traffic Safety Administration are putting out alerts to tell people to not wear Apple Vision Pro goggles while driving Teslas.
What are they watching?
So,
what are they looking at through their goggles?
Well, so there was a guy by the name of Dante Lentini.
Of course.
Oh, boy.
Who is 21 years old and recorded a video of himself behind the wheel of a moving Tesla pretending to type on a keyboard while the car is driving itself. And, you know, they interviewed him afterwards, and he said that he was doing it, quote, all just for content.
Neat.
Like, wow, I hope he got a bunch of yucks out of it.
A lot of likes.
Hope you got a lot of likes. I hope that dopamine in your brain is just surging because, like, this stuff's just stupid.
He's a little old. 21's. I can't say I wouldn't have done that at 17. Stupid, admittedly.
21's a little
21's
old.
a little too old to be doing this.
You know,
Yeah.
I mean, it's and I don't know. Well, no, I do know. There's something about the last 20 years continuing this movement where it's cooler to be dumber.
Hasn't that always been the case?
I don't think so. I don't think so. But maybe I'm wrong, but I feel like
No, I know exactly what you're saying. You see all these people doing these dumb things and
we had to
posting
put-
it on the internet.
we had to put out an alert
so they
to
get
not
likes.
eat Tide Pods.
Right.
You know,
Also, social media, like Tuck said, driven.
Yeah. That's all it
And
is.
I don't know what the answer to this is, but on stuff like this, where we're talking about actual driving, I think there should be much stricter penalties on this kind of stuff. And again, I've always been a fan of, I think for stuff like this, you should have the ability to get a little bit creative with punishments. Hey, you're caught driving a car with, a VR headset on. Great. We're going to take you right into the courthouse, and we're going to take your car and back over the headset, and you will never do that again.
And just
good deterrent. No one's harmed by it, but okay, this is what you think is cool. No, you're not going to be able to do this again.
Okay.
Things along those lines. I just it's bothersome to me when people deliberately endanger others for the likes.
But the first prospective employer to Google this guy will find this story or see the video or read a write-up about it. So presumably he's going to suffer some ostracism.
Maybe.
Or worse.
Maybe. There's not enough shame in the world today. There's just not. There's plenty of stuff that's actually funny that you can do, but driving a car with a VR headset on.
Yeah, I don't see the humor in that either.
Like, what's so funny about it?
Yeah, I don't think that's funny. Yeah, I don't think it's funny.
I'm kind of sick of it, quite honestly.
So now Apple has to probably go in and make a driving mode similar to their phone because this dope is wearing it while he was driving.
Yeah, it's going to be like that, and it's not good. It's not good.
Not good for humans.
No,
that's a loss for humans.
It really. I mean, this is the kind of stuff that this kid's lucky that he didn't end up as one of the Darwin Awards for the year. You know, or that someone else didn't. I mean, this could have been really, really bad, especially given that none of these driving assist systems are exactly perfect right now. So it's a little bit disappointing.
And when regulators say don't do something, of course, people are going to take this as a dare.
Of course
they probably shouldn't have acknowledged it. Now we know it's out there and it gets people worked up, so there will be imitators.
Yeah, I really think if you add more visceral punishments, not just like a ticket, but yeah, we're going to back over your headset with the car you were driving it, with. I bet you won't do that again. Especially since that headset's, $3,500 or something like that?
Yeah, before taxes.
Oh, yeah, you throw in the taxes, it's at least $3,600. Let's take a quick break. When we come back, we got Stack Roulette after this.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Hi, this is Susan Powers from the Armstrong Advisory Group. With spring on the way and taxes due soon, now's the perfect time to review your overall financial plan, and our monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline numerous issues that may affect you going forward, like evaluating any income changes for the upcoming year. It's important to understand how a difference in income might affect your long-term planning. Even if you're comfortable with your current plan, taking stock of potential adjustments may help further secure your assets in the future. Learn about this and other important strategies in our new guide called 9 Tips to Spring Clean Your Finances. Get your copy today by calling 800-393-4001. That's 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Your next incredible vacation is just a click away. The United States Virgin Islands is the perfect place to enjoy sun, sand, great food, unbelievable beaches, a wide variety of water sports, and the relaxation you deserve. So go to usvi.com. Learn all about St. Croix, St. Thomas, and St. John. Each island is special in its own unique way, and all have plenty to offer as you decide where to travel this winter. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, one of the things people need to look at starting out a year is whether or not they expect a major shift in their income, either higher or lower.
Yeah, I mean, a lot has changed in terms of how we work and just family dynamics over the last few years coming out of the pandemic. And you've seen a lot of people jump back into the labor force that might have gotten out, or the opposite of that. And certainly it comes and impacts everything from 401k contributions to how much you're going to be able to save and put out for the next year. And so just understanding where the income side of that budget is going to land for 2024 and doing that evaluation is an important step of the process.
The other piece to pay attention to is the expense side of things. In particular, if you have one-time expenses that are going to be coming up, if you need work done on the house, if you've got car expenses or anything else, making sure you plan for that as well.
Well, how are you going to finance it? Do I have an emergency fund? Am I going to borrow money for a home improvement that I'm doing? Maybe I'm already retired and I'm on a fixed monthly budget from Social Security and maybe a pension, and I've got some big expense coming up. You might need to realign your portfolio for that coming expense. And so really just, again, comes mainly down to budgeting here, but thinking about where those income and expense numbers are going to land for the full year.
Our guide is titled 9 Tips to Spring Clean Your Finances, and you can request it 2 different ways. The first is by visiting ArmstrongAdvisory.com. The second is by calling 800-393-4001. That number again is 800-393-4001, or you can visit ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Mark, what have you for Stack Roulette?
Do you guys blame the internet for recent bank runs like Silicon Valley Bank, the speed with which it imploded? To what degree, if any, do you place blame on media or social media? There were a lot of excuses. I'll call them excuses. There were a lot of assignments of blame on panic incited by commentators and others on social media at the time. Any reaction? There's an article about it in today's Financial Times, which is where I'm going with this.
It's on my list of people to blame for Silicon Valley Bank going under.
Twitter is not.
Social media is probably like in the 25th to 30th place.
Yeah,
it's there.
A Yale professor of at the B school down there wrote about this in today's Financial Times, which is why I bring it up today. Fed officials reflecting on last year's banking crisis have blamed social media for commentary for acting as an accelerant. And at the end of the day, if there's nothing there, a frenzy sparked by social media should burn out pretty fast. Only if there's fire, in addition to smoke, does the thing persist. So I don't know that and the author of this piece is also skeptical, highly critical, in fact, of excuses that point the finger at social media and media generally. If a panic has legs, it's because something's fundamentally broken.
Right, because there was plenty of chatter afterwards about, who's going to be like the next one to fail. And last year, I think there were 6 bank failures total in the United States. It's not like it led to additional runs on additional banks or anything along those lines. And I don't think that's because Americans, by and large, understood, the term lending facility that the Fed created. Right? Like, if you ask the average person, how does the bank term lending facility work for, that backstopped Silicon Valley Bank? They'd be like, what words did you just say? So it's not because Americans just suddenly became more confident. It's just, no, there was an actual problem there. And the problem was you had a really big concentration of big deposits, and they all tried to leave at the same time because it was a really small community of big deposits, and they talked to each other, not using social media, using, group texts and stuff like that from Silicon Valley founders and things like that. And they all said, gee, we got to get our money out. And that's no different from any other bank run, which is, look, we've all seen A Wonderful Life. People start talking about it, and the bank run happens. And in this case, you know, you didn't have George Bailey there to put his honeymoon money in to keep the VCs afloat.
Yeah, well put.
Imagine trying to make A Wonderful Life today with, like, Silicon Valley Bank as the bank as Bailey Brothers Building and Loan.
They'll probably remake it.
It'd
I
be-
mean, they're remaking everything now, so.
You think they'd remake A Wonderful Life?
Sure. I put money on that, actually, yeah.
It's actually kind of surprising now that you mentioned it that it hasn't been remade.
Yeah, you would think so.
I mean, think about all of the other Christmas movies that do get remade. I mean, how many Christmas carols have we had now?
Oh, I don't know.
There's a Muppet one, which might be the best one, by the way. You guys big Muppet Christmas Carol fans?
I don't think I've seen that, actually.
The whole thing is, it's what makes it so great is the fact that there's only one human in the entire movie. It's Michael Caine.
Okay.
He's Ebenezer Scrooge.
Yep.
And the whole reason that he took the job was to play Ebenezer Scrooge as, like, a completely straight, like he's in a dramatic role with a bunch of Muppets.
Was he aware that there were going to be Muppets?
Oh, yeah. No, he literally, like, they've interviewed him about it, and he said the only reason I took this role is to play it as dramatically as possible while surrounded with Muppets.
Oh, right. I got to see that then. Wow.
And
I can't believe
it's
that.
just absolutely fantastic. And here's the quote from him. So this is after Jim Henson's son, I believe, because Henson died, I think, in like 1990. They offered the role to him. He said, I'm going to play this movie like I'm working with the Royal Shakespeare Company. I will never wink. I will never do anything Muppety. I'm going to play Scrooge as if it is an utterly dramatic role and there are no puppets around me. And then he did. We're done for the day, but we're going to be back tomorrow. We got jobless claims coming out then. We'll see you tomorrow on the Financial Exchange.